What's going on, everybody? Welcome back to the channel. And in today's video we're going to be talking about what's going on with the stock market. I haven't had the stock market update in a while, but in this video I want to cover everything that's been going on. We've seen a lot of selling off in the stock market, a lot of decisions, a lot of stuff in the news, different monetary policies talked about by the Feds, potential interest rate hikes, and just a whole lot of things going on in the stock market, which has seen pretty much a bit of a decline from the all-time high level, which was here. We fell about 10% so far, around 12% or so at the bottom, and now we're still kind of falling through. So let's go over some of the things I'm seeing in this market and how it reflects from potential bear markets that we had in the past. So first of all, I'd like to point out this channel that I drew, and this goes back from about 2009, after 2008 financial crisis, and you see that pretty much has been the bull channel that we've had since 2009, 2008. As you guys can see, we've been pretty much in this uptrend channel ever since. We did have that dip from the COVID dip, but quickly recovered, and then we overshot the channel up here, which we had found support previously on the very top of here. If we zoom it in, as you can see, we bounced on it, and personally I think this overshot that we had here, especially in the SP500, and it's even more seen the triple Qs, which we'll look at it later, was because of that monetary policy, the 0% interest rates, that quick money. People just trying to get in the stock market, making as much money as possible, as quickly as possible, and then getting out. So that's why I think we overshot this. But as you can see now, we're kind of falling back in this bull. It's still a bull market in my opinion. I know a lot of people be calling for a bear market, but for me, until we really would drop off of here, this secondary line here, which would be around the 350, maybe 360, depending if we keep chopping around, it could even be in the 380s, till we fall out of that. I wouldn't consider the bear market just yet. So for me, it's just a correction back to the mean average, which the mean average will be back in this bull channel from up here. Some other things I would like to point out is this head and shoulder pattern that we're seeing at the very top here. Zoom a little more out. If we draw this out, you can see one shoulder, two shoulder, third shoulder, one shoulder head and secondary shoulder form. So people calling this as pretty much the top of this run, and this indicated pretty much a bear market if it does break down, which is totally possible, but is it 100% confirmed? Of course not. So we'll take a look at that and really how this pattern here really looks like the same pattern that we saw in 2007 before the financial crisis. So if we go back to 2007, zoom it out, draw yourself back. As you guys can see here, this had this previous support levels, and we had really a similar pattern here with this one shoulder head a little higher, secondary shoulder broke down, and kind of led into that 2008 market. Very, very similar pattern. Now, head and shoulder pattern, unfortunately for us, is one of those patterns that actually is one of the more likely to work out. It's one that has the highest percent probability of working out, so it is kind of bad news for us. Another big key factor that we see in a head and shoulder pattern. Head and shoulder pattern is pretty much a distribution phase, a phase for all the long-term investors, all the whales, to pretty much get out of positions, sell into the rips, and kind of offset all of their gains. And one thing that you do see usually in this head and shoulder pattern is that you see, we see here this lower volume as we have the upside, and then we see as we're going down, we see this even higher volume. So on the rips, it's kind of lower volume. On the dips, it's higher volume. Again, you see us going up here, volume going down once yet. Then you see us as we go up here, and as we see us come down here, this volume going up even higher. Then as we go up here, you guys can see in here, that's the lower volume, and as we tank down, you see the higher volume. So you see, as we go up, lower volume, down, higher volume, up, lower volume, down, higher volume. So what does that tell you? That tells you the whales are selling into the rips, and they're not really accumulating on the dips. And then you see this massive volume here. When we did crash, everybody's just selling out. So that right now is very similar to what we're seeing in the current head and shoulder pattern. So if we zoom it out and kind of go here, we see this this here kind of on some pretty like low. We have some volume spikes because we did have this dip right here. But overall, I would say this has the volume average about here. Then on this dip here, you see this volume just increase so much more. And then again, look at how low the volume gets on this next high right here. Look at that. And then again, look how higher it gets when we have this dip, leading into this dip here. And at the bottom of it was really around this level here. We did see some increasing to a lower volume as we're dipping. Now this little shoulder here was pretty quick with it on the daily. Just some really quick moves up and down. But overall, I would say lower volume leading out of that. So again, around a really ugly sign is seeing that lowering volume as we have rips. That means that a lot of people are not buying the dips and they're not going long on a lot of positions. So that is not really good at all. If I were to zoom this out, the potential targets that I would first see is this pretty much just 400. We do have a really small gap right here around 401 to 400. So that would be like one of my first initial as you guys can see it right up in there, really small gap from here. That you guys, if you guys are aware of this, 9 out of 10 gaps to get filled, and that's not that 400 level, and that would be from the top just about putting us almost in bear market range. No, it would be about 16%, so it would put us in a correction, not quite bear market. Like I said, for me at least, I don't count bear markets off percents, but basically just off of market structure. And for me, this bull run has been going since 2009 after the financial crisis, so that for me, it would have to drop off out of this shoulder here, which is possible, guys. It's not something that's not possible, just so you know. But I think that will be our first target if we do break down out this 433 zone. We did have a dip here, but it got quickly bought out and slowly leading down. But another big indicator for me is if we add real quick our moving averages. And I will be using the moving averages and not the EMAs just because we are looking kind of like on the macro side. So the main thing I will look for this confirmation is to see this EMA 50 really cross down and create a death cross with the EMA 100 right about this level here. And that will really give the confirmation of the momentum switching to be a downtrend rather than this uptrend. As you guys can see, pretty much this whole run we've never seen anything cross, and we have bounced on it ever since this crash here back with COVID. But we saw all the MAs pretty much cross over each other, and ever since then all the MAs have been just going straightly up. As we can see, these have kind of been trend turned down a little bit, but we hasn't confirmed yet. So that'll be like the major confirmation I'll be looking at, seeing this orange MA 50 cross down the MA 100 and cause a death cross, and showing that the momentum is going lower. And especially what I'm seeing with the SP500. My first major target would be this 402 to 400 level, which is this really small gap that we have, and we haven't not filled it just yet. And my overall like most bearish scenario would be just bouncing back off this major trend line here from the pretty much this whole bull run. Like I said before, this bull run has been like pretty much since 2009, and we're pretty much, in my opinion, going back to the mean average, which would be in here, rather than overshooting this, because we overshot that because of the interest rates going higher, really pushing a lot of growth and tech stocks that the S&P 500 really cares a lot of them. If we go back to this 2007 head and shoulder pattern, as you guys can see, once we saw that death cross come through, that's when we had a major first dump, and pretty much getting rejected on the 200 after that, all the way down until we finally recovered it and start pushing back up, and the MAs start crossing back over each other to continue the bull run. And as what I'm seeing with S&P 500, we do see this major head and shoulder pattern. Does it have to play out? No, it doesn't, but there is a high likelihood of it playing out. So we'll have to see what's going to happen. Next up, let's talk about the triple Q. I'm sure a lot of you guys are holding a lot of these tech stocks, because we get asked about them all the time. And in here, we really are starting to see that MA50 cross down the 100 and also the 150, showing a lot more pressure, a lot more major selling, and we're seeing this kind of bigger head and shoulder here on the daily and on the weekly, pretty much crossing down, and that is looking a lot more bearish. But also the triple Q is really outperformed S&P 500, so it makes sense that tech are the first thing that are going to be falling and falling the hardest, because as you guys can see, they had a major overshot here above that same 10-year bull run that we were talking about earlier. You guys can see this is pretty much been trading in this channel, just like the S&P 500 from back to 2009, and it's really been trading this much even more cleaner than S&P 500 until we had this overshoot because of the interest rates going back higher. So my first major target for here would actually be this top of this trend line here, which would be around 330, and we'll probably see some kind of bouncing that I would expect, and then potentially fall back in this bull run over here. So it's pretty much, you can see it had caused this new channel up here, crossed down below it, pretty much had this little bear flag here, which is now playing out and breaking down and setting up a pretty somewhat of a head and shoulder pattern here, as you guys can see too, pretty much kind of looking like the S&P 500. So for me, the triple Q is looking a little bit more weaker, which is to be expected. We already had that confirmation going down. And in the triple Q, the one thing that I do see a lot of, let's go over to SOXX. So SOXX is a semiconductor ETF, and this is what I see being probably the most likely scenario. For a lot of tech, semiconductor have been outperforming the rest of tech. It's been the only thing that's really not getting really killed as much, really, if we can say this, but we can see it's kind of causing a head and shoulder pattern here as well. And I do expect this SOXX to be one of the more profitable shorting opportunity, because the growth is kind of already down the gutter, and a lot of other tech stocks are, and this SOX is creating a really strong head and shoulder pattern with a 50 almost crossing at 100, and I think this is probably going to be the next big thing to fall. If it were to fall, that means it's going to have to play out. But I will definitely have my eyes on SOX and a lot of the semiconductors ETF. Same thing goes if we go to Microsoft and all of the FANG stocks, minus Facebook, because Facebook's been getting pretty much killed lately. And yeah, Microsoft and Apple all showing these major head and shoulder patterns here on the daily time frames and on the weekly time frames. And these are some of the stocks that all long investors have been hiding out in and not selling. So they've rotated a lot of the growth stocks into these more stable companies like Microsoft. But just because Microsoft is a good company doesn't mean they're not overvalued. They can still definitely go down, and definitely aiming around this 240 down here, 230 for the shorter term price target. Definitely has potential to go down much lower to that as well if we do have this head and shoulder play out. And you can see the head and shoulder being like the neckline just being around right here, and this playing out like this. And the way you do usually mark down the head and shoulder, you can mark it down from the top to the bottom, which would be about 17%. So if they were to play out, that will put us right around, if we check, if we have the breakdown here, 17%, it will put us around the target I gave to around 237, maybe around 230 or so on. So that's on the shorter time frames. It could definitely drop even longer if we do fall back into that bull cycle from 2009 in that range. Could definitely fall back to all the way to the 200s, but it's a little too early to call on that, so we'll just think about it, but we won't execute on it. Next up, let's talk about IWM, the 2000 ETF. This has been kind of a beautiful shorting opportunity if you're in the chat room. Talked about this, we fall back here in this supply zone, jump back up in the demand, get rejected, and kind of shorted back down again. I would like to just show this on the weekly chart to just make it look a little more cleaner too. As you guys can see, pretty clear. Now setting up a bear flag, kind of like looking like it wants to break down some more. And we also have a small gap here. We delete that. But as you guys can see here, we had this pretty much massive range, and a lot of people thought this was pretty much like a huge bull flag. If we go back down from down here, from 2000, you guys can see it could have been like potentially a bull flag. We did have this fake out here, and that fake out here was really showing a lot of weakness into the IWM. You guys can see this volume on the selling candles just so much higher than the ones on the green candles. You can see more selling here. The get buyout here because we did kind of oversell very quickly. But to me, this is very bearish, especially since we had this fake out here. Everybody was looking the longs got trapped, got back down. So IWM not looking much better than anything else. It does have a gap around here in the 165, 166. It's actually like a double gap Scenery got filled from the first pandemic drop. So we're definitely looking to target that if we do fall this 190 area here. Definitely looking to fall for that. You guys can see the MA50 has now come down to cross the hundreds just because it's so flat for so long. But we definitely could totally change. And this is on the weekly time frame actually. So let me check on the daily. On the daily, you can see cross down actually, and probably looking to get rejected again around this area if we do have a small gap up, and just kind of come down and aim this little level over here of 165. So nothing really on the indices looking at a lot of strength, just a lot of weakness across the board. The long trades that I'm looking at, and kind of the name of my game, it's going to be buying a lot of gold dips. If you go over here to gold, and gold recently has had a strong breakout on the weekly time frame. And if you're in the chat room, we've been really adding to our gold positions and T position, which is some gold ETFs and stuff like that, gold miners. And if you guys do find this video, of course, if you guys finding a lot of value in this video, make sure to leave a like, subscribe down below. I do put in a lot of time and effort into making these videos. We actually see this triangle here break out strong on some really high volume. Also, if we do use the brush indicator, it's pretty much creating a massive cup and handle as well. You make this channel kind of like this, massive cup and handle from pretty much on the micro side. If we go back to like 2014, 16, and really from 2012 to about 2018, so about 6 year time, gold was in a bit of a bear market. And 2018, if you guys were trading back then, there was a drop because of higher interest rates from the Feds, and that's kind of what started the bull market from gold. And then it got stopped pretty much by the COVID low interest rates. That kind of got stopped, but now you can see this really massive breakout over here could really lead us to about 2600. If you if you want to chart this out either as a bull flag, you take this from the bottom of the flag, you can kind of add it. I made this flag a little too big, to be honest, because it needs to be charted from the bottom of it, but probably it sits around the $2,600 range. So gold definitely has a little upside on the micro side, guys. Of course, we're talking about the micro side here, so it's gonna be dips and stuff along the way. And if we zoom this out from pretty much cup and handle pattern, 45%, we take that from the top or so, 45%, again around that $2,600 range. So that's kind of like the major target I have in the next coming pretty much 2 to 3 years, really. Like I said, it's on a weekly chart, so really macro side. So gold is another one. The XLE, it's another big trade that we've been in. We've seen a lot of breakouts here, and we've pretty much been trading this all the way through, looking for like a dip. And if we really could come down to the 60s to 59, it would be really good accumulation. But we're starting to see gold, like XLE, really like accumulated so much the past few months to the last few year. Like as you guys can see here, look how much the volume would increase on this pushes here compared to the dips. You see this dip here, lower volume, and then you see a higher volume as it goes up. Again, like kind of dip to like it created this head and shoulder pattern that didn't play out, but like really on lower volume. And now again goes up in volume as it pushes up. So this shows there's a lot of accumulation by the whales and large institutional investor in these energy sectors. And we know that energy, financials usually, and gold do really well with the high interest rates. I'm all with that. So XME, which is the mining metals ETF, French gold miners, silver miners, all that stuff. This one recently just broke out on the weekly time frame. Been chopping around this zone pretty much the whole 2021 into 2022. Recently broke out, and you can just see the volume increasing through the breakout. It's really good to see on the breakout candles. And with this one really probably wanting to test all-time highs, I would like to retest this $48 zone here to add to the position. If we take our horizontal line, we have some resistance probably around this $60 level. If we really break out about this $60 level, 77, if we really do break out about that $77 level, looking for the all-time high. On the macro side, also had a pretty large W pattern, pretty much like a double bottom W pattern here. So it's kind of just neckline here is where the main point we're trying to break out, and we did break out. So I don't expect much resistance getting us to the 60. Like I said, I would love this back test here. If we do get this back test, some more right on the daily time frame. If we do have this back test, oh, wrong tool. This little pullback, I would definitely be adding to my position around this 47.88 for $8. That'd be like a really great entry. Like I say, look at this volume rising in as we break out. So that's some of the positions and trades I'm looking at, and pretty much overall state of the market. In the comments down below what you guys are looking, what bags are holding. I know there's a lot of people bag holding right now, so let me know a lot of the bags that you're holding. You can ask my opinion on it. I might have another live stream and we can go over some of these charts as well. So I hope everybody likes these videos, and pretty much get my whole idea on what's going on in the stock market. I'll plan this one for the crypto market as well. My latest video on the crypto market is pretty much my idea hasn't changed. That's why I haven't spoken too much about it. If you not watched that video, make sure you go watch that video. I even say when I plan to buy the dip, because I'm not buying any dips right now on Bitcoin. And yeah, leave a like, subscribe, and I'll see you in the next video. Peace.